I look at that on a technical basis. I look at technical analysis as well. So I think it could be fairly easy to get there if we go through the old high at 5,600. And if you look at the bullion banks, even though I think the bullion banks have been following them for since 2002, and I always found that their forecasts were very conservative and they always had to revise it higher, with the exception of Goldman Sachs, who see gold at 5,400 at the end of the year. Most of them see it around 6 and even higher than 6,000. So that's why I think 7,000 wouldn't be a stretch. But in terms of what might drive it there, it's difficult to say because a lot of people thought at the beginning of this war against Iran that gold would go to the moon because oil would go higher and it's a safe haven. And it hasn't really done that, even though we're still up on the year. So yeah, all those reasons you said that they might hike rates might not be, let's say, positive for gold. But I think a lot of times you get something like that and it's like it's already priced in because people are looking at it already. So yeah, mostly technical, but fundamental, yeah, it's difficult to say, Michelle, because right now everything is so uncertain between the US and Iran and this conflict that if there is a resolution very soon, yeah, it might help things. It might drive oil lower, and it might make the central banks hold off from raising rates. I mean, I saw some statistics in Europe today. The Purchasing Managers Index service sector, they all dropped well below 50, even though the US one's still holding up, but I think it's only a matter of time. So yeah, if we get some kind of resolution to the Iran war, and then yeah, we could see things calm down, the central banker and the economy slows down, then they might actually have a reason not to raise rates. And if anything, I follow M2 or money supply, and for all the major countries, it's making record highs. So they are kind of inflating. They're talking about higher rates, but at the same time, they're pumping the liquidity into the system. I remember after the 2024 election, gold had gone up to 2,800, and then it dropped to 2,500 after the result. And a lot of people were worried. And here we are now at 4,500 almost, I think, near there. So almost $2,000 higher. But if I had to pick a number, I would say we could go as high as 7,000 by the end of this year. I wouldn't be surprised. And in 2 years' time, we could be, even at 10,000, I wouldn't be surprised. So here's the chart. And the reason why I see it going probably to near 100 by July is that we saw a low here on March 23rd, around 60. And ever since then, we've seen higher highs and higher lows. And the recent low here also hit this trend line that we had broken out of. It retested it and it's held. So if we make a new high in the next few weeks, and we go through 90, it's a very, it's not very far away from 100. And that's why I said I think we could go to 100. It's just, it looks like we're now back on the trend is higher because we're making higher highs and higher lows. Of course, this is, nothing is ever like in technical analysis can change, but it looks pretty good in my opinion. Yes, it would be like some kind of settlement in this Middle Eastern conflict.
Mm-hmm.
Yeah, that would help silver, because silver and gold have been like every time things get worse geopolitically with that war, oil goes up and gold and silver get they get hit hard. So yeah, I would think it would be pointing to some kind of resolution of the conflict. I mean, I've been hearing that since last year. Like like the second half of the year that they've been buying not just silver but gold and physical. And if you think about it, the higher the price of silver goes, and I mean we are at unprecedented prices go back 45 years. If someone had told you like a year ago that silver would go up above 100 and would be at 75, people would have questioned that because that 50 level had been such a big barrier. But the higher the price goes, the more interesting it becomes as a reserve asset, because it's more interesting to hold gold in the central bank vault if it's at $150 or $200 than it is at $20. So it's less bulky. And I think the other reason they're buying physical silver is because there's a realization that countries need to safeguard like real things, real raw materials for developing new technologies, AI, and also for electrification, especially with what's going on in the Persian Gulf or with the Strait of Hormuz. I think like China has proven that they've rebalanced their energy like infrastructure quite well. They're doing a lot of let's say they're moving towards EV a lot in China, and they actually use thermal coal to power their electric power for the EVs. Of course, in the West, we're not doing that because we, especially here in the UK, we're into this climate change thing that we can't use coal. I think so, yeah. And it's both monetary and also for resource nationalism. So, yeah. And I think also it's going to be a big part of the monetary system, if you want to call it, for China's really, they're the ones leading the BRICS, and they've been buying a lot of silver as well. I think in March they bought a record amount of silver, and in India, even though they're asking people to stop buying gold and silver, they did make silver from I think April 1st. You can use it as collateral for loans. So it's becoming much more important, and I think it could be the same thing for these countries and China. I mean, you look back and historically, I think China, the word for bank is silver. The word for money in many languages is silver. So why not go back to it? It will go very quickly up to probably like 200. So maybe not 300 like Bank of America sees it, but why not 200? And I think in the last few months since the top in gold and silver, concerned that it's going to go lower. And usually that's a good thing. That's a reverse indicator for the sentiment being low. And I saw the other day as well, Michelle, that I think Bank of America bought a big chunk of a silver mine. I think it's going to be like from the mid 60s until the 80s, where they went sideways. Sometimes they went up. I think, like you said, there's so much liquidity that is going into like tech and AI. And now people are talking about the SpaceX IPO. Everyone's really excited. But so paper assets, stocks in the general stock market, bonds, financial products like corporate bonds. But what I think is going to happen, from the mid 60s to the early 80s, the hard assets are going to outperform the paper assets. And eventually I see for example, the Dow to gold ratio going a lot lower, because in 1980 it went down to 1. Right now, I think is just above 10, but it's been as low as 9 recently. And so that's how I see it. I think holding stocks, techs, and bonds in the next 5-10 years, it might not lose you any, let's say, nominally a lot of money, but in real terms, in terms of gold, silver, and everything else you need to survive, it's going to lose purchasing power, the currency that is. Assets that are you have to get out of the ground, that you have to work hard to produce. It's not like derivatives or bonds, which are just a loan that you can create, like governments can create out of thin air. Commodities, commodity money, physical gold and physical silver. Farmland would, because you use that to grow crops, which are they are commodities. But yeah, I think real estate, if it's not leveraged, if you haven't borrowed that much on it, it should be fine. I mean, over time, it's always something that is good to have. But what I think the people that might get hurt are people who leverage to flip it and stuff like that. That could be in trouble, because if yields are going up, it's going to hurt people with debt. The most important card, and that's that they don't have a problem with just time. They can keep holding off the U.S. and the longer it drags on, the worse it is for the Trump administration, especially with